Hi, good afternoon. This is Jeff here. Just wanted to shoot a quick video. We're going to talk about beans and wheat mostly as we did the corn. We will flash corn a little bit at the end just because of the action today. Just want to keep you apprised of what's going on. Continued just complete out buying in these markets today. Not a lot of selling. We did have a pause in the buying spree till at about 10:30, 11 to almost 1 o'clock. There wasn't much action until right before 1. It took back off again. I think you know the traders, the buyers are just kind of discounting anything as far as the weather maps are concerned in the 6 to 10 day forecast. They haven't produced, so if it's not in the 1 to 5 day forecast, I think they're just not even going to pay attention to it at this point. Sorry, I got a frog. Right, I'm going to start. I got November soybeans pulled up here, and as you can see, we're straight up here. It's pretty extravagant, straight up $2 down from down here to 11.70 to 13.76. And what I wanted to really show you is we're back up into here now. This isn't going to hold if it doesn't rain, in the I-states. It's just not going to. But $14 kind of kept a lid on this thing ever since, we went back through it back in June of last year. So almost a year ago, pretty much a year ago to the day, actually, looks like, is when we broke 14, and we've been hardly had any closes above it except for 2 or 3. So, if we break this, the highs are next. That's the only resistance as far as charts concerned. Now, technicals don't really matter in certain instances when we got these weather markets that are, not predictable and not highly relied on at this point, as the maps just aren't producing like they said they were going to in the especially Illinois, that's really dry. Iowa's hanging in there, but they also need some rain pretty soon too as well. Let's go ahead and go to Kansas City wheat. Where did my Kansas City wheat go? I pulled up the 20 September chart because we do have some guys that are cutting down here, but it looks like most of our harvest is probably going to have to get pushed out into the September contract as the July contract runs out at the end of June here. So kind of want to pull up at the September chart for what you guys are going to be marketing off of if you haven't already sold the crop that you have produced or are going to produce. What we're running up into is this TDST line with a blue count. So these blue counts run to 9 as we've gone over before, and we're in day 4 of this count. And usually, it's a pretty good indication if we break this line on an up move in the account that will actually go into a 22-day type run up. So this is a pretty significant area as far as the September contract goes. We don't really know what's going on in the wheat market. We're the highest priced wheat in the world. Seems to be quite a bit of, still some wheat. You got Europe going to have a pretty decent crop. Now they're talking about Russia maybe having some drought issues over there. So, and Australia maybe running into drought. So maybe that's the underlying here. We don't know, but obviously we don't have a huge crop coming in either. So maybe the world supply might be contracting a little, and that's what's pushing this a little bit. But I think as far as any of these markets concerned, if we see these start to break, we need to be ready to pull the trigger, and even maybe out into 24, because especially corn, we just don't have we've got a big acreage, and if it starts raining, and we're going to have the supply, because if we have a pretty good supply, we're still going to raise our carry out to pretty big numbers, as Tim went over yesterday, just because our demand is not good. I'm going to take some of this other stuff off here so you can see this a little better. Okay, on December corn, just want to reiterate, these things is just extending this wave out, and we don't know where the end's going to be. We're running up into this 637 area, which was the high that's back in October of last fall. Now, we wouldn't be surprised to see a little bit of a pause before the weekend. Just, if you've got good profits in a move, you may want to push to the sidelines or start hedging that a little bit going into weekend, not knowing, the forecast moving for 2 days and not be able to trade it. So we wouldn't be surprised to see a little bit of a pause before the weekend, or maybe a little bit of pullback. But there again, this thing could also just keep running. So I would stay, we've been talking about being short futures, long calls. We've seen no reason to stay out of that or move out of that position at this point. Just stay tuned and stay vigilant, and we'll try to keep you informed of what's going on. And again, be ready to make sales even in 24 if we start getting rains in Illinois, eastern Iowa, because this thing's going to roll over. In our opinion, we could be wrong. Something else could be coming on that we don't know about, whether that's more demand. One thing in the demand market came out today. The U.S. actually lowered the ethanol mandate by 250 million bushels, I believe. So there's another hit to the overall demand to the corn crop. Not a big hit, but it's significant when you're talking about USDA having plenty of room to talk about the WASDE reports. So if you have any questions, don't hesitate to reach out. We know sometimes these times can be stressful, and we understand that, and we are always willing to help and try to do what we can for you. So with that, there's always risk in trading futures and options, and trade in light of your financial conditions. If you need anything, please give us a call. Thanks.